started, if you want to get things rolling.
Sure. Okay, I'll call this meeting to order at 1:33. I'll take the roll. We don't believe Legislator Gilmore will be here. Mark Cornell, myself, present. We have Supervisor Jason Keating.
Present.
And Elizabeth Frace.
Here.
We have a quorum.
All right.
So.
Oh, and just real fast. So we do have the new library director was announced.
Oh,
okay.
That person will be, what's his name? We'll look. That person will be, I think they're starting this month. So
Okay.
we didn't throw them into this mix yet. And we have off in July, so we're gonna invite them to the August meeting, but they will be on this committee as well as John was. So,
yeah.
So yeah, anyway, there'll be one more eventually in our next meeting. You'll have another one.
Okay. Has everyone had an opportunity to review the minutes from the March meeting? I would say the only change, although we've gotten it onto our regular board of directors.
Oh, we saw that.
Yeah, we saw that.
Sorry.
Just, we'll get that.
We're giving you an opportunity
Yeah, I
to
didn't
do it again if you wanted to.
I would much rather.
Exactly, so we're trying to
Much,
give you
much
that
rather.
opportunity, Mark. I mean, take it.
Let me go back there, like, so much better.
We're manifesting that for you.
Okay, with that, can I have a motion to approve the minutes with the minor correction?
So,
I'll second.
Okay, all in favor? Aye. Any opposed? Minutes have been approved. So the only, I guess the first item, and I would like to just ask a question on this. Does the Audit and Finance Committee need to adopt the accounts receivable policy and then recommend it to the board? Or is this more of an informal review?
This is an informal review right now, and then I'll ask Andrew how he wants us to proceed. I think it'd be a recommendation. So you guys
Okay,
review.
So we wouldn't necessarily do a vote ourselves per se, but we would recommend.
Yeah,
to
I would
the full
almost say
board and
just
then
do
they
the
would
vote,
approve
so
it.
we
Okay.
have it in case, but then you just say I vote to recommend this to the board.
that would be my suggestion. So
Okay.
from the NYMER board on in, so that each of the subcommittees vote, you know, if we agree, vote, move it to the general.
The larger, yeah. I would just vote to recommend,
Yeah.
yeah. And we're not gonna do that today. It's not on our agenda for today.
Okay, yeah, we're just gonna.
We just wanna make sure you guys are good with it, and then we will have you recommend it to the board, and then I was just gonna ask, we don't need to, but I just want him to put together the formal resolution, and I want them to review it still. Legal hasn't reviewed it, just to make sure they don't have anything they wanna add to it.
Okay, so, I mean, not gonna lie, I mean, there isn't a whole lot. to
No,
it.
and this was reviewed, if you recall, by our accountant.
Yeah, so, I mean, generally speaking, our accountants are the ones that are going to be, for the most part, implementing.
No,
A lot
Courtney
of
and I will be.
Oh, okay,
Mhm.
okay,
Yeah, so, the majority of this will actually be Courtney.
okay.
This will be rolling into her responsibilities on the accounting side of it.
So one of the areas that I think, in the future, obviously there are issues currently with, but in the future would be, I think we probably will need to, beef up like segregation of duty.
Yeah, internal
But there's
controls
not a
will
whole
have to
lot of
change.
duty that can be segregated at this point.
Yeah, when we go to the point, so as you'll hear in the next meeting, we're moving forward with the RFP for operations and, for the ECC contract. We've taken marketing out of that. That's gonna stay on the Erie's net side, but everything else will stay the same. Probably in the following contract, we'll start looking at how ErieNet wants to sustain itself with less consultants. And it's kind of the same model as STN and when they brought in a CFO and things like that. So that's when we'll probably look at being able to change the internal controls, yep.
Yeah, because as we transition to more of a functioning organization, an operating functioning organization, whereas, this is majority construction management.
Yeah,
organization.
we'll be in operations next year, which is why we need things like this, but we're not to the point where we're able to, or in the position to bring in and lose consultants on the majority of this.
Right. One other question I had, because I just could not remember and I didn't see it noted in here, are we operating this all on just cash basis or accrual basis? So the general distinction between the two is, one of them, accrual basis, is when the expenditure or the revenue is earned versus when the cash actually changes hands.
This will be changing of hands, I believe.
Okay, so we're dealing with that, because one of the things I would have suggested as part of the accounts receivable policy, if we were on accrual basis, is sort of a process for booking ARs, which would be the when you send out an invoice to someone who owes you money, that would be the point where you record the revenue, is when you send out the invoice, not when you receive the cash. Then what would end up happening is when you actually receive the cash, a second transaction is done that clears out the AR or the majority of it, because like in some cases, maybe you only receive partial payment or something of that.
What's the benefit of doing it that way? Seems like an extra step.
It's more, well, it's more real time, and especially for larger organizations, you wanna, there tends to be some amount of, sometimes a significant lag between the point at which a revenue has been earned or an expenditure has been earned, and the point when you actually pay it out. So it really keeps your books actually tighter and less susceptible to those inherent delays. Because so sometimes when
I can see that on like accounts payable, because we're taking it out at the time that it's gone versus when it's cashed. But on receivable, to mark it as received before it comes in seems looser to me. Again, no accounting background.
Yeah, I mean, it certainly creates a concern you have to deal with, which is sometimes you do an AR, you book an AR, and then you don't ever look back at it, and 5, 6, 7 years go by, you're like, hey, I still have this AR that's looking like you got revenue, but you didn't, and then you either have to try to recoup that or write it off.
Right.
But that's generally the process for like municipal governments, like we're required to do everything by accrual basis.
Oh, well, then do you think we would be?
I don't know, that would be.
That's a question we need to ask, I think, Lawson.
Yeah, I mean, generally speaking, as an organization gets larger, it tends to be more advantageous to do it on accrual basis. Because you're able to keep track of things more in real time rather than waiting for, payments to come in. Now, you're keeping separate documents that sort of are tracking that. That's why, like, you have a cash flow document. That's keeping more track of like the literal cash in the door, out the door.
Right.
As a separate thing from your regular books, but this tends to keep it a bit tighter in that, when you think you have an expense, that's when you record it. So there are often times where there will be a time like right now, for instance, with ECC. They're earning, like they're doing work, and it takes a while for them to invoice that work. In theory, if you're doing it on accrual basis, what you're doing is you're booking an accrual that is an estimate for the amount of work that has been done by them. And then when they actually send you the bill, you're clearing out that accrual for the
Okay.
real information. It's not that there's a right or a wrong way, but I think that's a reasonable question that, you know, it might be something that as ErieNet gets bigger, maybe it transitions
Yeah.
over to accrual
We have
basis,
it.
and there are pros and cons
Yeah.
to doing it each way.
Let us talk to Lumsden about that, just to make sure we don't have to do it that way. Right now, we don't actually really, we don't bill out. So the only money that's coming in is reimbursement. So we're not recording a reimbursement, well, we kind of are in the
Well,
back.
I mean, theoretically,
Well, we're
you could be,
recording it, but I mean,
so-
we're not giving it ahead of time, although we're keeping track on the back end of what we know is
That's
gonna
something
be
something
reimbursed.
balances.
So for, the MIP
Yeah,
grant, right?
Yeah.
At the point when you're sending in your like packet of documentation to claim,
yeah, we already did that reimbursement.
so that would be the point, if you were doing it in accrual basis,
Yeah.
you would book the AR for the amount that you claimed
I
for.
see,
And then when the cash comes in, it just clears that amount. Now, sometimes the cash will come in and they'll say, oh, well, you had an ineligible expense or something like that.
right,
Then you end up writing off the difference of
yeah,
it.
we would have had
and then that
So we
shows up here.
submitted, that's a great example, because we submitted 655,000. And then back and forth, there was a double charge on there of 5,000 that was found. And so our actual return will be 5,000 less, so. Okay,
Yeah, and there are other ways to deal with
I mean,
that.
but eventually we'll get the 5,088,000, like we'll
So what, there was a duplicate, so probably what they're gonna do is do, like a credit memo where when you send your next packet of documentation, they're just gonna send you
No,
5,000
they made
less
us
for it.
reimburse, or they made us change it before we
Oh,
actually
really?
get approval on the reimbursement.
Oh, okay, so it beat out sending it in, because that would be another way.
We send it in and they go through like a 60-day review process,
Oh, okay.
back and forth
Oh.
before it's actually approved. But let us ask that question, but I don't think it will change this per se,
Mhm.
but it will change how we implement it. And so, or if we have to add anything in here, let us ask that question and have Lumsden review it with that.
Okay, I think we should consider, because I don't, inherently for, ErieNet, I don't know what is the more, appropriate or advantageous way. I just know, there are multiple ways you can do it.
Right, yeah, let us ask that. I mean, as of right now, though, this is how it would be done. As far as the policy goes, as far as implementation, I'd have to let you guys know how we're gonna do that. But that's a good question, not someone I would even know to ask.
We all learned something.
Yeah, look, some of it is really, counterintuitive.
You did a great job explaining it.
You did, yeah.
Yep.
I understand it now,
Yeah,
or before I was
it
like,
makes
what is he asking me? I don't know the answer. Okay, perfect. Anything else on here? I know Elizabeth had given us a few things, those are highlighted in red. Why is this one in there?
Because it was like an unfinished thought, so
Yeah.
it's kind of just,
I just felt like it just stopped,
It
like
was.
it wasn't. But I really think it was the third bullet, it was like duties should be segregated so that the individual responsible for posting payments is not permitted. And then
yeah,
it was
and
like,
it was like, yeah.
to do
I
what?
think we've discussed it and I haven't translated it over to the policy.
That's a separation of duties.
Mhm.
So duties shall be segregated so that the individual responsible for posting payments is not permitted. Maybe it should say is not. It should just basically be like is not doing both.
I mean, what you have here makes sense. In the original document, I just felt like it was an incomplete.
So you're fine with the
Yeah.
wording for is not permitted to perform bank reconciliation functions?
Yeah, I'm fine with that.
All right,
And that's what Lumsden does.
and Lumsden does that, that's correct, yeah.
One thing I would say is, then on the, write-off policy, where it says board approval over a set dollar threshold, we
Uh-huh.
probably should come
What
up
is
with
that?
what that
Yeah.
set dollar threshold becomes. I don't, I don't inherently have a strong feeling of what's an appropriate level. Maybe that might be something to ask of Lumsden for,
Okay.
you know, an organization this size, what would they sort of suggest?
Okay,
Well, I guess as a kind of a tertiary layer here, what if somebody, since we have such a big staff, what about if somebody's on vacation, away, sick or otherwise? Because that should be, so we should be mindful of that, you know, we're not creating respectful of all of us, right? We're not creating a process that necessarily, you know, kind of gridlocks everything as we become hopefully much more busier down the road as we start getting additional business. Just thought.
yeah, we haven't run into that issue yet on,
Is you both up here?
and a lot of things we can schedule.
Okay,
So Courtney, like, can schedule these things, in the system.
okay.
So
You're
if
using Workday?
we're using, Zoho, which is.
Zoho, okay, so Zoho.
Which we really like.
Yeah.
Yeah.
It's a nice platform.
Okay. Anything else on this? All right, we're not ready to move it forward anyway.
Yeah.
So we'll have some
Yeah, I think-
questions. Which is why we wanted to review it early before we start receiving. Okay,
Yeah, but those were the only couple of things.
no?
Okay,
All right, and then the only other thing I had was just kind of an overview of the expenses that we've done, or that we're, like, kind of where we're at. Just because it's a moving target. We have about 26.5 million that has been spent.
okay.
You know, some of that is, well, we've actually spent more than that. That's 26.5 that's spent that's needed. But then we've spent around 30, but there's reimbursements coming. So, we have investments that are still vested through November 26th. We have, and that's the majority of our money, with the exception of 1.5 million that we just pulled from the June 11th investment that will go to the bank to pay monthly bills. We have 2.1-ish amount coming from the county. The IRU was, so that will be reimbursed for the equipment. We also have another $1 million that we've spent on the MIP grant to date. 650,000 of that was submitted for the milestone 1 reimbursement. And we learned on our call today that looks like it's going to be approved, everything's done, they've received everything that they needed from us, and that should be reimbursed by the end of July.
How much is, still tied up in Make Ready? Where,
Oh, with the reimbursement
Yeah,
side,
yeah,
I said, what did Fred say the other day?
Did he say?
I think he's looking, I think it's like over $1 million, yeah. And then, of course, the MIP reimbursement will be $5,088,000 in total. Our second milestone, because of the NICEAG NRA, which we'll go over today, there's been big updates for that. But because of that delay, we're probably gonna have to push our second reimbursement or milestone submittal, because you have to have a specific amount of MIP built. We're reviewing something that came over from NICEAG late last night to see if that will benefit us and be able to stay on track, because right now we're on track for submitting the second one the end of July. But it really just depends on the NRA schedule, which we didn't find one yet. So anyway, that's that. I just kind of wanted to give you guys an overview. Nothing.
I know, there's nothing that we can do about it, and it's several steps removed, but this extension of the ARPA money specifically for broadband, concerns me. I'm very nervous about it because that decision was made bureaucratically, and every decision that's made bureaucratically can be just as easily unmade bureaucratically after the fact. But there's nothing we can do about that.
I have an update on that anyway. They did sideline ours and put that it was at risk of not being approved for extension. They asked us for a bunch of information that would be helpful for them to submit with the resubmittal for it. I'm hopeful we don't need it.
What reason? I mean, given that we were like
Just-
one of the first ones moving forward per se.
Well, we were one of the last ones in MIP. and they won't count the, backbone delays. And our MIP project is completely dependent upon our backbone. So we had some creative ways of getting back to them, and then we actually had like a New York State Thruway major change where they want us to reroute something, which causes us to have to apply for a change in a railroad permit, a change in a DOT permit. You know, these are all delays that they're looking for. And I'll talk about it in the meeting, but if we do not get the extension, we have Plan B. And, I'm hoping we're gonna be done with the majority of it by the end of the year anyway, and now that we have some movement on the NRAs, that looks possible. So, anyway, yes, it's all crazy. Anyway, if you want to adjourn, I think that's all I have.
Okay, may I have a motion to adjourn?
Motion?
Second. All in favor? Aye. Any opposed? No, we are adjourned at 1:54.